Hello, everyone. Matthew here with Forex Nation. And we got the NFP report out of the way. We got Monday behind us. Looks like European banks are going to finally open up tomorrow after the holiday. And a lot of good developments to go over. I just want to go over real quick how our trend lines and support resistance lines and indicators have worked out really well at predicting what's been going on in the markets. This is where I had the trend line last week, and this was the swing low. This swing low also coincided with the 50 fib line on the Fibonacci retracement. I'll show you real quick when you draw the lines in here. You can see that price action came down here to the 50 and met resistance, and that's a pretty strong source of resistance typically for price action, the 50, especially the 61.8 levels. But anyway, going forward with this, I put the trend line in here to kind of gauge where this uptrend would possibly meet either support, or if broken would signal a new sell-off. And you can see the non-farm payroll report, the biggie, came out on Friday. Price action was way up here. It had moved all the way up to the weekly R1 like I said it would, and found resistance there. That's also right around that 3,600 price level. That's a psychological barrier for the market right now. And after meeting up with resistance, the report came out right here, and you can see how much price action of volatility that produced. Sit price action down, and look where it held up, right on our line, almost to the pip, to end the week above our trend line. Now we started the week off sort of strong. We've been ranging for the most part. It's kind of nullified the trend line, and so what I've done is I've moved it now to this swing low. And this line right here is a particularly good line to pay attention to. The 3463 is a level that has come into play once before. It's a major level, just in case you don't recall. I'm going to zoom out real far here. This is the line, 3463. This is the level that was tested 3 times when we thought originally that perhaps the euro dollar had finally found a bottom and was going to start to rally back up about 3 weeks ago. So right here you see this was that was back in February when the euro dollar was finding support at the 3463 level. And what do you know? Fast forward to today, and here we are once again at the 3463 level, finding it to be support once again. Now, let's talk about what's actually going on, though. We've got the CFTC, that's the Commodity Futures Traders Commission, and they control a lot of information about the Forex market here in the United States, and they have a lot of data about who's doing what, and apparently a whole lot of people, a whole lot of big traders, big banks, big investment funds are starting to sell the euro in record numbers and buying up dollars. And that, of course, translates into selling pressure on the euro dollar. So I would expect once European banks open up to see a sell-off. We also had this thing close at the end of the New York session below the 3,500 level. You can see right now it's at 3,491. So psychologically, we couldn't even close above the 3,500 level up here. There's a lot of sell pressure on it. We have this downtrend line I have drawn here too. I'll kind of show you from back in mid-March. And so that's another area to watch for, just in case there was a rally. Honestly, my prediction is that we're going to end up seeing a decent sell-off, and it will definitely be indicated by a close below this 3463 level. So that's a very safe point to jump in. I would look for immediate support to not be reached until we get down here to the 3390 level, because that's where the weekly S1 is, and that's pretty much the only time that we can refer to that there has been any real support. So once the euro dollar breaks this 3463, look for a sell-off down to the weekly S1 pivot point. For the meantime, one other thing I thought I'd go over, I use the hourly and the 15-minute a whole lot, and today's market was typical of when you have a bank holiday in a country, and when you don't have a whole lot of volatility and a whole lot of action as a result of that, and you see the ranging market, the market's just moved sideways. This is the choppiest the euro dollar's been in a while, and this has been really hard to trade. And look here at our moving averages, how literally right when the crossover should have happened, the red moving average follows the blue moving average. That's very rare to even see something like that. And that's because we have this knee-jerk reaction of strong selling pressure and then hard buying and then strong selling. And then this was near the end of the day, which is where we're at now. And now we're moving sideways with what looks to be a crossover happening here. I'm ignoring that because I believe that the pressure of the data, the non-farm payrolls came out, and it turns out the United States has been adding jobs for the first quarter. We're actually looking at the manufacturing sector and the construction sector, excuse me. Those two sectors have actually been adding jobs, and that's where you typically will start to look for signs that a recession has ended, when you start to see more building, more construction, more manufacturing in those areas being done. And that's what we've been seeing, and therefore the dollar is looking very strong right now. And then of course we're still looking at unresolved issues over in the Eurozone with Greece, with Italy, and then the other countries. So fundamentally speaking, the euro is still quite weak comparatively speaking to the dollar, and so I would not expect any rally. I would not trade any crossovers going up. I would simply stick to the main trend, which is still a downtrend. So yeah, I hope this video helped. Good luck to everyone.